All right. It's Friday again. Ryan, here we go. It's been a minute since we've done one of these.
Yeah, at least probably a couple months.
Yeah, well, been even longer, I think, for you. I know Eric's been on here a couple of times. It seemed right, given what's going on with the world and what's going on with markets, that we check in real time. We do lots of newsletters and video updates, but this is a nice kind of mid-month. Well, we're only a week into March, but it feels like it's mid-month technically. With what's going on with markets. Short version is markets are down on the year, on the month, on the quarter. I think I'll share something here real quick. I'll share one of my screens. Just looking, if we were to take a look, you probably can't see this too much here, but just like let's take a look at the S&P 500. Just the performance even year to date, down 10.5% from when we're recording this today. It's been rough. We dropped in January, popped back up in February, and then Putin did his thing, and here we go.
Well, I think the stories that we've had, we started off January with some of the issues with what the Fed's going to be doing. Then, a month later, we're dealing with a war. It feels like we probably have had enough negative headline stories and turbulence for a year, but unfortunately, sure, we're only 2 months, really 2 months and a week into the year.
Yeah. Well, we've got Wall Street Journal, Russia amps up Ukraine attacks. So this is still going despite efforts to try and quell this. The inflation today, we're getting a print here. This just here lately, inflation's popping the highest it has in 40 years with no signs of slowing down. I mean, this makes for a challenging investing environment. I think we thought at this point inflation was going to start to chill out a little bit, but what's going on in Ukraine certainly has kept it from chilling out. In fact, it's maybe made matters worse even.
Most likely it's probably made it worse. And, it's one of those things that are unfortunately out of our hands. It's out of the Fed's hands too, and trying to control it when you have all these other issues causing prices to go up.
Yeah, that's some of the worry. So we have some things to share. I think what we can do. Let me get out of here. I think we'll do this. Sometimes we go one and one. We've got 4 things to review today. And the first one is talking about how much of an impact Russia has on the MSCI, because that's really it's something that I get phone calls about. Oops, how are we in this? There we go. This is something we get calls about pretty frequently, or at least I have, which is to say, I want to get out of any emerging market funds because Russia, I don't want to be invested in Russia, whether it's a political statement or an economic effort. We're saying, some clients are saying, I want out. One of the things that I kind of point at is how little Russia represents of the emerging market index, right? Russia's not even in the developed market index because of the size of its economy. And so it's only making up 1.5% of the emerging market index, which is really small, really small.
So it's easy to say to clients right now that have concerns that if you did have some exposure to emerging markets as a broad basket, you probably did have some exposure to Russia, but in the scheme of things, it's really not anything consequential now. Not to own any when you own emerging markets is not probably possible, other than what with the sanctions and some of how they have to write down the assets, that has some kind of impact on whether you're not going what kind of exposure you actually really have.
Yeah. It's noteworthy also that the MSCI is talking about dropping Russia from the index, which would clear it out all entirely. And it's also worth noting that many people don't actually own the index for the emerging markets. We own emerging market mutual funds that have even less than this. I think the funds I was telling you earlier that we use in many of the portfolios, less than 1% in Russia, and probably give it 2 more weeks and it'll probably be down to 0, just the same way the index is.
Right.
So cutting and running out of your emerging markets stock or funds or mutual funds or ETFs is probably not the right answer as far as what's going on with your portfolio, right?
Right. Yeah. I think at this point, it's okay to carry emerging markets if you still want to have that diversification without having to worry that there's going to be some large impact to the downside because of Russian exposure and equity.
Right. Yeah, I think the real effects aren't so much being invested in Russia through your investments. The real problem is what are the spillover effects? You know, we just looked at these inflation numbers; they're the highest in 40 years, and frankly, with energy, they're poised to go up. The inflation reads are almost It's a mathematical certainty now, almost, that they're going to go up from here, not down from here. And so that's kind of a bit. When we're talking about Russia and its effects, it's not so much the investment directly in Russia. In fact, we can kind of take a look at the Russian sectors and see where the most international exposure is and what is going on in Europe and how it weighs on things. This doesn't tell the whole story of why tech is getting killed so far this year, but it certainly tells part of the story why technology is really, really having a heck of a time. As far as the downturn, the NASDAQ has performed so much worse and so tech heavy, whereas obviously energy is going to do pretty well. But utilities, real estate, financials, less of an exposure internationally, and particularly to Europe.
I do tech exposure too. I think people, because the NASDAQ is on the news as one of the three benchmarks, every night. We do see it going down the most, and I think part of the reason too is sometimes we get this experience in investing, which is what goes up most also comes down the hardest, and so it'll feel that because it has done tremendously well for a very long period of time, and again those extended gains over the many years also leads it to be the one that also can get hit the hardest.
Well, it's starting to feel like a little mini tech bubble burst, is it not?
Yeah, for sure. I don't know that a lot of people are feeling it the same way because I think that the NASDAQ as a whole, back when the .com bubble burst after the 90s was the whole entire benchmark. We're starting to see, some of the smaller names, not the Apple, the Netflix, Microsoft, Apple, but the smaller components are the ones that got hit really hard. And I'm not even sure that most people know that a lot of those those other names, are down 60, 70, 80%.
Yeah.
Which is
a couple of names you just mentioned are down like 40, almost 50% on the year. So even some of the mega cap has gotten demolished.
Yeah, it's been definitely tough on the technology side.
Yeah, and some you might even argue oversold because even with some of these earnings reports that have come out, like the numbers have been maybe a little soft for some companies, but they're getting hammered.
I think by default, though, some of these names get hit because they are in the technology sector. By default, they are going to get hit harder, even though it's not necessarily warranted.
Yeah, and sometimes it's not even technology, right? Sometimes it's even like sometimes it's not just technology. Sometimes it's even like retail names. It's just if these earnings reports aren't perfection, then some of these names are getting it. Just there's this cloud over the market right now where everybody is just de-risking, and it's not just because of valuations or just because of Russia or just because of interest rates, but it's because of lots of things. But oil, obviously, and energy is playing a part in this. So, Ryan, this is one of yours that you picked to kind of chat about today. What's up with oil?
Yeah, so I picked this only because I feel like this is like the common discussion of everyone, which is, have you seen how much gas prices are? And it seems that everyone that I talk to is running over to Costco to get their gas because it seems to be one of the easier places to get cheap gas, without having to really research which local gas station is selling the cheapest gas.
Right.
Gas was high previously, prior to what was happening with Ukraine and Russia, but has got exacerbated because of it. Yep. Really, it boils down to the fact that, if oil is getting cut off from a large country that produces it, we have less of it, but the demand doesn't diminish, and so therefore prices go up. I think around here it's not uncommon to see definitely gas prices are in the neighborhood of upwards of 5 to 5.50. I've seen SoCal looks like they're hovering at some places around $7 for gas right
Yeah, I think the reality is where we are in Central California, we're going to look at $6 a gallon. I would expect before the summer is over, if not before the month is over.
Yeah, and I think that as again the weather gets warmer, we start to drive more too. California already has higher gas prices than the rest of the nation for the most part, and so it's just going to lead to prices that we probably, at least in my lifetime, I probably can say I don't know if I've seen.
Yeah, adjusted for inflation compared to where we were in 2008, we're still not at the peak. And it's dangerous saying, "Oh, this is the highest it's ever been." Well, yeah, but McDonald's cheeseburger was 50 cents.
Yeah, there's definitely some inflation. You have to adjust for inflation, otherwise
Sure.
it's not fair.
But we are close to where we are at all-time highs, certainly adjusting for inflation. Interestingly, this is kind of one of the drags on the economy. This kind of inflation is a drag on the economy and something that can't be fixed with higher interest rates. We're also driving more as we get out of COVID, right? I saw a stat year over year, we're driving 7% more. We're consuming 7% more gasoline than we were this time last year. Okay. So it's not just a supply issue, like everything. It's everything right now, at least. It's a demand issue as well.
And the spillover effect to this, of course, and I think most people know this, is that if gas prices go up a couple of dollars a gallon, then it's you're spending $20, $30, $40 more on your gas each week, which the money's getting pulled from your pocket that you can't then go spend on something else that you wanted discretionarily.
It's a tax. It's a tax on everybody, and it disproportionately affects the people who can least afford it. Yeah. Well, this is not a super it's hard to be real excited about what's going on right now, frankly. I will say, though, that we are kind of at the average correction point. I don't have a chart for it, of course, but, we're on the S&P 500 right now. The average correction is 14%. It's not to say that and we're not even there yet. It's not to say we won't get there or maybe even go have a bigger correction than this. But so far, we don't see what would be maybe bear market territory and like economic recession yet. But stuff like oil and stuff like inflation certainly can hinder growth, and that's could possibly be a problem kind of as we go forward. We don't have a chart for the last thing here, but we wanted to kind of just, I think, chat about the Fed meeting coming up next week. The Federal Reserve is going to meet and talk interest rates, and even Jay Powell came out and said, kind of gave a little bit of a preview. What do you think is going to happen next week, Ryan?
Yeah, so the meeting's on the 16th, and really it's the first meeting that we're going to have in regards to the Fed raising interest rates. And so the Fed's in a tough place, just kind of with everything with dealing with inflation, and that's their main goal this year, is to kind of combat inflation and get it down to a more reasonable number. They only really honestly have a couple of tools in their tool set, and one of them is to raise interest rates, which we expect that they're going to do next week.
Right. I think a lot of the handicapping that's been going on with the Federal Reserve is when and by how much, right? Are we going to raise rates the Fed going to raise the Fed fund rate 0.5%, 1/4%? How quickly are they going to do it? Market, especially in January, was really kind of gripping tightly when Bullard came out and said 0.5% in March and a full percent before we get to the mid-year point. I don't think there's a snowball's chance in hell that's going to happen now, given the kind of global uncertainty. But they certainly have to do something, and Powell has said 0.25% here in March at the very least.
Yeah, so think of this more as like the start line, right? This is going to be the first interest rate hike that we've had in a while, and therefore it's going to be a matter of watching exactly where we go for the remainder portion of the year. And honestly, I think it's going to be, the Fed's going to continue to look at inflation every single month and kind of keep making a decision for the next meeting to decide whether they need to raise interest rates and by how much. And so this is a moving target, kind of depending on how inflation stays high is going to dictate what kind of movement the Fed's going to have to continue to do.
Yeah, I'm going to go on a limb here. I'm going to say four increases, a full percent before the year's over.
I think
starting next week. Maybe they take September off because the midterm election. But I say a full percent for the year.
And I think a full percent is a very good benchmark. I think if anything more aggressive than that, you could maybe see a little volatility within the markets.
Yeah.
So
Well, so much of the inflation is like energy, right? But every time we wait and say, oh well, the supply chain's going to relent or demand is going to chill out, it doesn't happen.
Well, nothing's happened. Nothing's happened. Unfortunately, it feels like nothing's happened to alleviate inflation. I think people are still spending money just like they always have. I think that the labor, again, we can't get enough people working, so you have to pay workers more, which is not necessarily a bad thing, but you have to entice people to by paying higher wages, which gets passed on. Sure. Again, you have the supply chain issues. That seems like maybe it's modestly gotten better, but it's still out there. Right. And now you have a war where commodities that we typically can get are not as readily available.
Yeah. Well, I think it feels like the Fed maybe has thought, well, I certainly maybe last year, the Fed has thought, okay, well, all of these things that are contributing to inflation are going to start rolling off or at least calming down. But instead the opposite has happened. It hasn't eased. It's gotten worse. And so now they really are going to have to come in. But they're coming in. I'll bet you if you pulled every single voting member on the FOMC, they would say they wish they had started doing this last year, because now they're forced to do it in a year where we've got this geopolitical instability that's making life.
Yeah, it would have been easier to do it in a market that was heading upwards at that point. Now they're starting at a market that's going downwards.
Yeah, and they're going to probably exacerbate the problem here. So, well. This has been a pretty dour casual Friday, but I think one that we needed to get a hold of. I think the problems right now are real, and everybody has a reason to be concerned. I don't think we have a reason to panic, right? If the spring of 2020 or all of 2008 or even the tech wreck or 1987, if it's taught anybody anything, it's that sticking with it is the choice that's going to benefit you the most. As long as you have the right stuff in place, whether it's enough cash and reserves to supplement your spending, if that's what needs to be done from a financial planning perspective, right? Not just from an investment perspective. If you're doing all the other right things, you can sit back and let your investments repair themselves over how
wait it out.
It's going to take. Yeah, wait it out. That's exactly right. So what are you reading this weekend? Let's finish up with this. We're headed into the weekend. You're going on vacation.
I am going on vacation. So we're heading, my wife and I are heading out to Vegas. First time that the both of us are going to Vegas in 2.5 years. It was a normal thing until COVID came. So we had a 2-year reprieve.
So you guys are foodies, so you're going to be eating a lot.
Yeah, mostly eating. Yeah, we're not really a gambler, so I'll read something casually, but I don't know. On these types of trips, it's you pass some time by putting something on your phone while you're traveling and you're in the airport and on the plane. But other than that, I honestly probably won't be watching much TV or reading too much. What about you?
So, you won't even not even on the plane. What do you read on the plane? What do you watch on the plane?
I don't know. Like I'll scramble because we're not really watching any shows right now, so it's not something that I'm going to download. I have something to download, so I'll probably scramble last minute. Something.
You said you're not watching any shows right now? Nothing?
Not really, and the plane flight's only 45-50 minutes, so it's not like you can get a lot done during that time period.
Well, so you're doing that. So I'll be busy emailing you articles and stuff in this weekend. I read a really interesting article in the Atlantic about how Germany is changing pretty dramatically here in a really short period of time, going in a much different direction than they have the 70 years since World War II. That has been kind of this the geopolitical stuff that's going on is really fascinating to me. In fact, I just picked up Ray Dalio's book, The Changing World Order. He put a YouTube video out that was pretty fascinating. It's about a 20-minute video. So that's something I'll probably begin this weekend. I will also be watching the Netflix Formula One.
Oh, documentary?
Well, they have it's every season. It's Drive to Survive, it's called. They've done 4 of them. It's kind of like Hard Knocks for football. Right. But it's Formula One. It's fantastic. I'm a big Formula One guy. So I love starting the season with Formula One behind the scenes. And then also I got to find a way to bootleg some Indian Wells coverage for tennis.
Oh yeah, or you should just go.
I would love to go. It's not in the cards, unfortunately. But you know, I don't have on YouTube TV. There's no tennis channel, so I'm gonna have to figure out a way to bootleg this one.
There's always YouTubers on there that have those videos. So you
Yeah.
gotta look hard enough, you'll find them.
No, I'll find something. So I'll be watching sports and reading about the changing world order.
Okay, well, I'll be eating my way through Vegas, and we'll have something to talk
All
about.
right, well, have some for me then.
Yeah.
Good. Well, excellent. Well, let's leave it there, Ryan. Have a good weekend, safe travels, and we'll do this again here very soon.
All right, sounds good.
All right, have a good one.